Good evening, folks. Welcome to TopGunStockTrading.com. This video is for Wednesday, January 29th, 2014. Today was Fed Day, folks, and the Fed continued to taper as planned, and the markets expected it. Yet they still, I wouldn't say sold off, but they did start to sell off pretty good there before they got a bit back up. I did stop out just in the money a little bit on my SSO. Nothing to write home about. No profits to write home about. Basically, is a slightly better than a break even there. Again, just paid for well, it was just minor profits, nothing big. So I'll post that back up on the Fox 3 alerts just for the record. But again, like I said, I put it in the money stop on that SSO, and we stopped out. As you can see, we closed just 3 cents above my support line there, 177.32. We closed at 177.35 today. So I still believe as long as we stay above this level, 177.32, and we don't confirm below it, as of now we cannot confirm tomorrow because it's not the confirmation process has not we haven't closed below that line yet, so the confirmation process has not been initiated or the first step has not been completed. As long as we stay above this level, I still believe that we still have a bounce left in this market up to this level right here, about 181.50. Basically, this red bar high here, 181.66, somewhere in that area. Is where I see the target here over the bounce. If we do close below this line and confirm, then this market is going to be going to have further downside to this market, and I do believe we'll get that balance, and then this level will be broken, and it will be broken with conviction. So ultimately, this market's going downtown Charlie Brown. But in the meantime, I think we do get a minor balance between the rest of this week and possibly into next week, which is awesome because it gives us some opportunities to get some shorts off in the coming week or so. All right, folks, let's look at the USO. Oil didn't do much of anything today. It looks like just some sloppy consolidation here. I still have that line drawn in here, so sloppy consolidation along this line. Again, it's going to move higher. There's no trade in my eyes for oil right now. The next trade I think I still maintain will be the 30 pierce to the 36 level, and again we'll monitor the way it comes into that level, and we'll see if we can't get off a short. For gold had another nice day on the heels of the Fed still maintaining their pace of their tapering. So basically, gold is the fear trade here. It's the store of value. So it had a pretty good day. It did have a hammer here, but I still believe this is just consolidation here along this line, either above it or below it. You'll see some consolidation before you get a move higher. If we get a pretty significant move higher, i.e. a 3-bar surge or something like that, in a short period of time, this 200-day moving average would be a great short. It appears at 127. Would be a great short on gold. But otherwise, we'll just maintain our patience here and let the pattern present itself, so we can either get a long trade-off on gold as it consolidates along this line and the pattern presents itself, or if it shoots right up into that 200-day moving average with this pivot up here at about 127 is about where it's going to be. Now keep in mind this 200-day moving average will be moving down, so we'll continue to monitor that, and if the pattern presents itself, we will look to get that off a short off on gold if it gets up there. Just an update on the Boeing trade. I did cover my Boeing trade here, even though it was basically I sold a bear call spread, which expires in February 21st. I had about almost all of my profit out of that, so I wasn't going to risk it at all. So I'd rather take my money and run rather than wait out another 3 weeks for it to eke out every cent in that call spread. So I covered my Boeing short today. and we'll just wait for a pattern to build. So if this bounce comes into this market, like I suspect, we're looking for some type of pattern that moves up into here, possibly this gap fill here, this 50-day moving average somewhere around a 136 level over the next 5 or 6 days. We'll look to get that short off, and that would be the perfect pattern in my eyes. Have the over the next 5 6 days, have this Boeing slowly move up or float up into this level, appears to 136 level to get another short off on Boeing, because I think Boeing goes lower. Let's take a look at some other stocks we haven't really looked at before. Apple is another down day for Apple. Carl Icahn is getting his head handed to him in this trade. He keeps buying more as it keeps going down. He keeps trying to offer, he keeps buying shares to do two things: A, support the stock, and B, try to gain persuasion over the Apple board by increasing his percentage of the ownership of Apple. But it's kind of hard to do with such a large company as Apple to get any type of sway just buying shares. So Icon is losing lots of money in Apple as long as it continues to move down. I have a level in here, 496.97. Since it's consolidating basically above that, and it came within $1.70 of that level, that's basically in spirit of. I'm going to go down to the next level down, about 479.81, or Pierce of 480. I'll have the 200-day moving average there as well. So we'll see how it looks like as it comes into there again, to see if the pattern as well as the time factors play out with price. So we're looking for that 3D, three-dimensional trade of pattern, time, and price to link up there or synchronize to present that 80% trade or 80% success rate. Google had another off day, still down 1.43%, down 16 points. I'll get rid of these Fibonacci retracements. This is bearish as well. Again, you see lots of these patterns where a big down move followed by sideways consolidation. That is indicative of a further downside to come in Google. Again, we still could get the bounce this week and next, and then it'll be another downtown move out of Google. These Chinese stocks are looking pretty beat down as well. Baidu, again, down move, sideways consolidation. Baidu, I think a good buy on Baidu, be about 142.90. So we still got a ways to go on Baidu, 16 points down there. But I still think that's if it gets down there, that's a no-brainer buy. Another stock of mine up is Sina Corporation. It's basically the Chinese Twitter, if you will, or as close to Twitter as China has. Looking at the levels, it's coming in to 64, Pierce 65 there. I think another good level is further down at Pierce $60. Again, we'll see how that goes. See what that looks like as it continues down. This was just an $88 stock a couple weeks ago, so it's off almost 25% in basically 2.5 weeks. So big down move out of Sina. Again, I think China's in trouble. Their PMI just came out, Producer Manufacturing Index came out below 50, which is a signal of contraction. So they're 49.5, I think, versus a 49.6 expected. So not a good number for China. And that's a government-produced number out of China. And we know, just like our government fabricates numbers, employment numbers, and economic data, the Chinese certainly do to make their economy seem better than what it is, especially with all these shadow banking and everything else shady going on there. So they reported a number that was just shy of what their expectations were. So that China is getting doubly hit tonight with the Fed taper as well as their own manufacturing coming in lower than expected. So Asian markets probably will get hit tonight as well, and we'll see if the U.S. markets can't turn it around. We still got the currency crisis going on. Again, I think it's just when the time is up in the market, the time is up, and the news stories that are happening seem to get married up with these with the market moves, and the media tries to correlate the two. But I still think it's all up. It's the answers are in the charts. And it's timing. It's like cycles in nature. 12 months in a year. Uh, and the moon has its cycle of 28, 29 days. Everything has a cycle. Life has a cycle, and the charts and the stock market does too, because they're traded by humans, and humans have a natural rhythm about them as well. So uh, it's just time. And again, I think the media just makes up stuff. Not makes up, but tries to correlate the events with the stock market motions or moves. You see, none of this came up on the past 3 or 4 months. Everything was hunky-dory. Even though China was having issues, they were injecting lots and lots of liquidity into their markets, but nobody seemed to care. Our manufacturing numbers, economic numbers, have been mediocre at best, but nobody seemed to care. Now all of a sudden, everyone cares about every little thing. And again, I think it's manufactured hype, fear, and greed in the market. All right, folks, this video is gonna be short and sweet. Again, my view on the market is if we can stay above this level, this 177.32, I think we have an upside bias to 181. However, if we confirm below this level, we got downtown Charlie Brown fast. Ultimately, the market gets through this level, and we are going down. Either way, we're going down. It's just a matter of when it's going to be. Is it going to be tomorrow, the next day, if we confirm, or is it going to be next week sometime after we get our bounce? All right, folks. I will see you on the charts. Have a good night.